It has been 1 month since the US elections have ended, and yes, we will have a President Trump and a Republican House as well as a Senate. So we have a full red sweep towards the right. But how have the financial trading markets reacted now that there has been 1 month of a President-elect Trump? Let's start with the US dollar. The US dollar index is currently trading close to 3.5% higher than the day before the election started. And at certain points, the index was actually trading 4.60% higher. So why has there been a surge in demand for the US dollar? There are three main reasons why there's been an increase in the US dollar index: higher interest rates, tariffs, and Trump's more US-centered economics. Analysts expect the Federal Reserve to adopt a more cautious stance on interest rate cuts now that Trump is about to take office. The likely additional tariffs on China, BRIC nations, and possibly even Europe and the UK could lead to higher inflation, pressuring the Federal Reserve to hold off further interest rate cuts. According to most economists, the Federal Reserve is likely to cut in December, but then pause for a prolonged period of at least 1/4 or potentially even up to 5 months. This is a key reason why the US dollar has become so bullish. Trade wars and tariffs are also known to support the US dollar, partially due to the fact that they trigger a lower risk appetite. The last time Trump set tariffs on China, the US dollar rose by more than 4%. Lastly, many economists believe that one reason Trump was favored in the US elections is because of his economic plan, which is more focused on benefiting the US, as he describes it, putting America first. If this approach has its desired effect, it could be potentially beneficial for the US dollar. But what about gold and other commodities, let's say oil for example? So far since the election, gold has fallen by more than 4.5% and crude oil is down more than 5%. Gold has actually been one of the best performing assets of 2024, but Trump does mean pressure for this asset. Gold reacts negatively to a hawkish Fed and a strong US dollar. Therefore, if the US dollar index continues to rise and the Fed does indeed opt to hold interest rates unchanged, gold may continue to witness these external pressures. Moving on to oil prices, this actually is a key part of Trump's campaign and his victory. Trump didn't shy away from the fact that he wanted to bring the price of oil down and increase supply. Actually, through fracking so far, prices have already fallen, and it's important for traders to know that oil and the US dollar a lot of the time has been correlated. Lastly, the stock market has defied expectations under Trump, with the Nasdaq up more than 6% and the Dow Jones over 7%. However, upcoming tariffs still remain a serious risk for stocks. While November and December are typically strong months for the stock market, the real test will begin when we have new tariffs. So let's recap. The real winner so far has been the US dollar and US stocks. Some economists even believe that in 2025, the Euro USD could again reach parity. But this is what economists believe. Let us know what your predictions are for the first quarter of 2025.